my dance, make it hurt.
What's up, Relentless Traders? It's your host, Surreal.
And Juan. I'm just going to use Juan this week just because I don't like adding the Gar. Everybody knows my name at this point.
Now,
welcome to episode 6. The tough action in the market continues, obviously. What have you been seeing on your side?
Not much from a swing perspective. I've been utilizing my one of my setups that I utilize for shorter term swings, but taking that concept of the tight risk entry points and then the expansion candles to the intraday time frame. And we spoke about this week when I said, I really didn't want to drill down to day trading, but I don't want to also sit idle in this environment too if I can make things work. So I've just been drilling down to the 15 and 5 minute and waiting for these these larger range days is what I mean, where it's not stuck in a range, but where they're, they have large range and there's volatility in select stocks.
Yeah, it's not been easy at all. I mean, not for me. I'm up on the week, up on the year, not by much, but it's the price action has been super tough to read as we've seen those the last week or so. Everybody thought the market was waiting on earnings, and obviously that had it's nulled out at this point. We had that big drop because of the Facebook earnings, and then Amazon. You think Amazon's going to come in and save the day, and then you come back today and realize that futures gave up all its gains overnight, and then it drops some more. So
yeah,
we've been having really tight range days. There's no trend. It's all chopping up shorts, chopping up longs. Doesn't matter what you are in this market, unless you're scalping and the direction and perfect entries, you're going to get chopped up.
Yeah.
I know I have. I gave up some gains this week for sure because of that. Just bad reads. Maybe not bad reads. The entries were fine. I'm looking at the things that have worked here in the past couple of weeks, but overall it's been rough just because you think the market's going to head lower and it heads higher, and when it heads, when you think it's going to go lower, it bottoms out or chops around or whatever.
Yeah, it's tricky. It's tough, definitely. It almost makes you like, we talked about this. So I was like, we got to remember that we don't have to show up every week and trade because, even though we've made some progress, like both of us were in a drawdown and then we kind of came out of that. And it's funny that it coincided with a counter trend rally, this previous rally in the market. So, you're able to catch some moves in there if you were good enough, maybe even swing it for a day or two, depending on what stocks, and your entries were. But it's very tight window because it returns to chop, and so you got to get your piece, get in and get out, take your profit when you got it, and really be patient and focus.
Definitely. And I think with that we can head into some end of the week review. What do you think?
Yeah, let's do it. What do you got for us?
All right, so let me switch over my screens. So for this week, I kind of want to go over my Netflix long. So I did take, I think it was a total of 4 trades this week. I was about a 50% win ratio there. I took a loss today on Netflix, and I took a loss yesterday on Apple. Both short puts in my case. I'm options trading. And then I took Netflix long, and then I believe it was Microsoft long at the beginning of the week sometime. I can't remember my first trade. But Netflix is the one I really want to focus on. The entry was pretty good. I've been looking for those tight risk entries as we've spoken about the past couple weeks. They coincide with a couple things I'm watching. I watch, futures. I watch the market overall, what it's going to do, if it's going to head higher, going to head lower, what trend it's in currently before I take a trade, because I don't want to fight the trend of the market. And then, if it's in demand, if it's in supply, like what it coincides with. So for Netflix, this is my chart right here. We had a trending day on NQ downward. It opened up, rejected VWAP, rejected supply, and then kind of headed lower. Netflix really started the day off kind of shit in the bed. It just trended lower the entire day. I didn't really see a bottom to it until NQ double bottomed and kind of began to rally. Netflix put in a big like ignition candle. I wasn't really trying to get in on that ignition candle just because I didn't know there was going to be continuation. That was going to be a fake out. It was nice volume, as you can tell, comparatively to the rest of the day. And when it started flagging out, that's when it really caught my attention. At around the 925 candle, I use a 5 minutes to trade. I use a 5 minute time frame to trade. Around the 925 candle, started holding 430 as support, and that was my bottom line there. I was waiting for some type of extension candle, and then on this candle right here at 935, this was a thick red candle, and then it held that support really well. That's when I entered, and then as you can tell, it kind of did a nice little move. The good thing about these big caps, and we've spoken about this a couple of times, Surreal, is that these things move so much in a day that you can consistently trade these and make money if you have, the right idea, the right direction.
Mm-hmm. Yeah, totally.
And people really underestimate that. People think you need, a 50% runner in the day to make money, and they want to see the big movers and stuff like that. But, you don't. I mean, Netflix, Nvidia, even things like Apple, Microsoft, these really big name stocks that you can consistently learn. You don't need to have 5,000 tickers up on your screens to be able to trade. If you learn a couple, if you focus on one or two, and you really learn how they move in regards to the market, in regards to volume, like when volume picks up, when it doesn't, etc., you can really catch some nice moves on these, as we've seen just this past week with like Netflix. For example, I know you traded Netflix a couple times.
Mm-hmm. Yeah.
So this was a small winner. I let this come in a little bit. I was waiting for a bigger move. The market wasn't, at this point, I know the market isn't trending, and most of these have to be scalps at this point. But overall, that was a nice win. My entry was pretty picture perfect at this point. And that's really gotten me focused on where I want to head to from now on when it comes to entries. This was also in demand, so it really coincided. There was a lot of little clues, little intraday clues for me that really helped me enter this trade. There's a lot of chop, man, as we spoke about at the beginning. And I experienced a lot of that this week. It's obviously, for a new trader like me, it's frustrating, and definitely a little infuriating. This is a super mental game, so we have to be able to know when to avoid. Like you said, we don't have to trade every day. We don't have to trade every week. If you just came off of a big, we just had a really good week. Why force it? If we know the market's not yet there for our specific strategy, if it's just chopping around, there's no reason to give back the gains that we have. And I think that's really important to understand overall.
Yeah. The chop will undo all of your hard work through a tough environment. So I think it's the main thing, like like we were discussing, is to really focus and be able to differentiate when you're like, okay, I'm not seeing, it's just not worth it today. It's not worth it. Well, even if you miss a move, what are the chances? And the more we can begin to differentiate those days from trending days, where even though it's a tough environment, there's a lot of volatility. So if you get that high probability tight risk entry setup where it's obvious, then for sure take your swing, take your, snatch your profit, and be like, hey, I'm making progress. But the more we can avoid these crappier, slow, chop days, the less damage we're going to do to our account and our mental capital, and kind of just slowly stack that progress in a tough environment. And then hopefully when the market returns to better times, or at least, trending down or trending up for, several days in a row, where it's a little bit easier to stack some more wins, I think is going to be crucial in times like these.
Yeah, and that's the thing, right? Because you can make money in a bear market too. The problem is this chop. This chop it's really gonna get you. If there's experienced traders struggling, what makes us think that we're gonna extract X amount of money from the market? That's not how you really should be thinking about it. Just as long as you have your setup, your risk is managed. Um, then you can go ahead and execute. But
Yeah,
this chop is so difficult to read, so there's no
it's
reason to.
dangerous.
Yeah, it is. You can really die by 1,000 paper cuts in this market.
Yeah, especially if your risk isn't tight too. You're just going to be gushing, not really paper cutting.
Yeah, it's gonna be.
You don't want to do that.
Yep. So, um, if you want to go ahead and lead us into I know you've had a pretty solid week, sir.
Yeah, and there was a couple of trades in here where I'm on a little bit of a win streak right now, so I'm getting really cautious and defensive. Like I talked to you about yesterday. I was feeling like I'm on the edge because I know I've been hitting wins, but there's some lapse in risk management there. So I actually wanted to talk about a Netflix day trade I did that almost turned really really bad, and even though I made money on it, I know it's a slippery slope, because I've traded long enough and I've been in enough trades so where I know how quickly with intraday trading discipline can go by the wayside and ego can come in, and that's why it's so important to trade with your stops. I'm discretionary in a sense that where I just don't like putting hard stops in right away from the entry, but I I will sometimes, depending on if it goes right into profit quickly, or I will utilize a mental trade where I kind of know at a certain level or a certain dollar value, if I go under, that's kind of how I execute. And that's kind of a slippery slope, and I'm still working on that. But, you know, I had a couple good trades this week, and then going into yesterday, Thursday, um, when was this one? Was this
Yeah,
yesterday?
this
It
was
was.
yesterday.
Yeah, sorry. This has been a long
It,
week.
it gets it gets tough, man. It gets tough
It
to keep
does.
track. I
So many.
forget sometimes what trades I took, and it's like, oh,
Yeah. So my thought process on Netflix was we had that big oversold, from the earnings drop off, and I saw it had a range forming, and I knew we were going to get a rally. Well, I missed this rally. I missed this big, huge 60-point rally. And coming back to your point of high price stocks and the ranges, if you get the tight entry right on a dollar stop, I mean, you're talking about a one to 25 to almost 60. It ran a 62 in after hours. So, just pointing that out, when you catch the market at the right time, if you're in the right, if you find a good stock with range that's in play, I mean, this was an oversold bounce type of play that coincided with the market rally. So, but coming to the trade that I actually want to talk about, I was actually going short. I was looking to fade that move from the oversold bounce. I wanted to fade that, so I was thinking, Netflix had on Wednesday, it had made a move lower. It had a nice trending day down lower, and I was really watching the weekly 200 SMA right about here, this red line here. So I had that marked, and I was kind of watching that to try and fade off that level on an intraday time frame. So kind of utilizing larger time frame tactics as key level points to do business off of on intraday. So I had this level marked from the previous day where it kind of double bottomed a little bit. So I knew that was a key level, and then we have the 423 weekly 200 SMA. So it gapped down in after hours, clearly fighting with these levels. Uh, and I just got a little overzealous on the short. I waited for the first 5 minute candle to form, and then I saw the next 5 minute candle open, and I just thought we were just going to fall, and I shorted that. As soon as I saw that, I shorted it, and it immediately ripped my face off and caught me off guard. This candle ripped in the other direction. I didn't have my stop in. I didn't have a hard stop in. Um, had I had that stop in, I would have been stopped out. Typically, I'd like to do $1 away, so my entry was probably 17.30. So I should have been stopped at 18.30 immediately. But I didn't have that stop in, and then that lets ego come into play, right? I know I was on a win streak. I was on like a 4 trade win streak, and I just see this candle ripping my face off, and all I can think of is like I'm like giving back all the hard work I've done. Like it didn't ever get to the point of over my max limit loss of $400. Um, but it got up there. It was I was negative 280. And so I tried to remain objective because I had gotten myself into that predicament, and I said, okay, well this candle ripped. let's see if it retests the previous level and uses it as support. If it does, if it starts to turn up off that level and starts to go for that high, I'll take my big loss and I'll say, well, I should have had my stop in. So I did remain objective. It came down and started testing this level. It held. I remained patient. Next 5 minute candle opened. It retested that high and then it began to fade off. So I said, okay, we got a level here now I can work from to try and recoup. And then it faded off of there. And I actually tried to add. I added a little bit. I added 5 shares around 426, around when this candle started fading back in. I added 5 shares, and then I added 5 more as it retested in here. Got real tight, came back, retested that level, added a little bit more shares to kind of get my average up from down here. It put my average around 419, and it did a lot of chopping, and it was just making me sick the whole time because I'm trying. I understand, like, okay, it's showing me the direction now, but I was just really disappointed with my initial entry and not stopping out where I should have. That to me lets me know if it's a good or bad trade. So, even though it ended up working out, and then I covered my position down here. Let me switch to the 15 because I was actually watching it from the 15. And so I kind of just kept walking my stop down. I was utilizing this kind of trend line here. And then I was thinking at the end of the day we could get that final exhaustion extension lower. But actually this candle here, as this started breaking this level, I started moving my stop a little too close, and then you could see this candle kind of rallied in my face, took me out at 409, and then gave another $4 to end the day. So it was about a 1-to-1 risk to reward because of how far the position moved against me. Um, so I'm not happy with this trade at all, execution wise. Like even though I kind of fixed my problem and the market kind of bailed me out, I pride myself on buying right and entering right and managing risk. And this could have easily turned up off this 427 level and ripped higher, and then I would have just puked it up here for a large loss, and we could be
Having a different conversation.
and having a different conversation. So big lesson there, stick to your plan. And even here, look on the 15, gives you a way better entry had you been patient. Let all this drama play out. If I had stuck to my plan too and played off these levels better, I could have got a really good entry, added a little bit here, and then waited for a retest, added a little bit here, and then I could have even added some on this break here. So I think really knowing how you're trying to trade and really having that plan down, take as much discretion out as you can, and that's going to allow you to not get into predicaments where your ego and emotions are coming in and you're holding on to something. Like, you got to get out. You got to have the stop in place. You got to buy right. So that was a big lesson. Even though I won money, I'm not proud of this trade. I'm not happy with it at all. It's kind of scary to see that I could just easily slip back into those bad habits. So something I'm trying to fix moving forward. And then one other thing I wanted to talk about too, just really quickly, I just wanted to talk about some stats and kind of how I've performed so far this year. One thing I noticed looking at this is my gross daily P&L. So these are kind of the dollar amounts I've been having day to day, starting from the beginning of this year. So we could see like these red bars are kind of a lot bigger than 250. $400 around this area is about my max loss I want to take on any one loss on the year. So I really want to keep these losses as small as possible. I may try and change it to under 250 now moving forward because I have cushion on the year. But you can really tell just by these daily averages kind of where my profits are falling around $300. So that right there gives me feedback. The market is very quick right now, and I'm only extracting about $300 on average for the positions. That tells me right there I need to keep my losses to a minimum of $150. If I'm only making around $300 on these trades, I need to make sure that any losses moving forward do not exceed $150 on any one loss. So that's just kind of something that I'm looking forward moving forward on. And then just coming out of this drawdown too from late January, I had a drawdown of minus 794. And I've just kind of been chipping away with these small wins on day trading and kind of just pulling myself out of this drawdown. And now I have a cushion, and I'm looking to build on that moving forward and keeping my losses small.
I think that leads us right into the topic of conversation for the week too. and that is the small accounts. Man, we're both we're both definitely a little bit more undercapitalized than a lot of traders. I know, probably both of us can add money to the account if we wanted to, but I think that's a decision that we've both made,
Mhm.
to not. For me, I know at the beginning, when we started the podcast, I was very adamant that we added, that we be clear with whoever listens
Mhm.
in, that we're not pro traders. We're here learning alongside everybody else.
Yeah.
The market's tough. My account is a little bit under 1K right now. I started the account back in December with a little bit over $500.
Mhm.
So I've got pretty good gains since December, but the market's gotten tougher. So I've been kind of, slowly, incrementally increasing.
Yeah.
And, there's a lot of things that go into, people really miss, there's misinformation around small accounts. People think you can grow them very easily.
Mhm.
And that's not the way it works. There's a lot of factors that go into small accounts that I think you and I are about to touch some bases there.
Yeah. I think that's it's really hard and it's a rite of passage in trading if you're starting with small amount of capital. But my thought process was always, and probably like a lot of other people, is that when, if I can't grow a small amount of money, why would I ever want to manage a larger amount of money? If I can't grow something from a small amount and let that account be self sufficient in terms of like, I'm going to only pull out what I need to pay the taxes on the gains, and that account is just going to run. I'm going to let it run, obviously until it gets to, if it ever gets to a certain amount of money, and then I can pull out that money to do whatever in real life I need to do, whether that's to pay off, debt or whatever. We'll get there when we get there, if it gets that large amount. But that's always my thought process. I wanted to start small with a reasonable amount of money. I think a reasonable amount's 5 to 10,000. If you can't trade 5 to 10,000 and grow that consistently, then you have no business trading over PDT of 25,000 or 50,000. Like you're just going to lose it faster,
Yep.
when you're starting out. But there are those obstacles, and they're really, really tough to get over. But that's what you need as a new trader, because it's going to force you to really focus and really prove that you have consistency to earn. And it works for sizing up too, you know. So the consistency, I think, is the main point starting out.
Yeah, it's very difficult. I know you mentioned, the starting capital 5 to 10,000. I started with 500 back in December, and the reason being that I really focused on, I'm an options trader, and people really think there's a lot of misrepresentation of the power of options, because you see some people on Twitter making X amount of dollars or X amount of percentage points. Everybody thinks they can just jump into options and do it, but that's not the reality of it, right? Um, the reality is that the majority of people are going to lose their accounts because they're options trading, and they're not managing risk. Most of my options cutoffs are sitting anywhere between 15 to 20%. I think my average is a little bit over 15% right now, whereas my average winner since December is sitting at around 31 or 32%. So I and that's really important to keep in mind, that those small winners are really going to add on to the like the end goal there when it comes
Hmm.
to trading. There's a lot of misrepresentation when it comes to leverage in the market, and I think, for me specifically, I have to be really clear with that. Just because I'm leveraged trading options, it doesn't mean I'm waiting every trade is going to be 100, 200%, maybe even 75 to 100% average. No, like I've had the trades, I've had the 100%, but it's not going to be every trade, and my average is sitting right now at around 30, and I'm comfortable with that, because I know I can get the quick premium spikes on those quick moves like I had on Netflix earlier in the week, and really be able to manage my risk off of that. There's a lot of things that go into it, and I think we can expand a little bit when it comes to like position sizing, profit taking, and then just like really knowing your personal stats.
Yeah, if you're not tracking your stats again, you have no idea what any of that is, and you can't play off of your numbers. Like that's the whole key is there's math going on within your trading that need to guide your decisions. Your decisions shouldn't at least I don't believe your main decisions when trading, whether it's you know, selling or where to take profit, and that's what I was kind of talking about with my stats in my journal, is if you don't know what your most recent average gains are and what the market is allowing you to extract, like what you're actually extracting and not what you're saying, like, oh, I have a price target of 450 on this stock and I'm entering at 400. Like, that's not a guarantee. That's a guess. It's a guess based on your technical analysis. It's not guaranteed. You need to base your trading decisions in real time off your most recent results. If I know I'm only making $300, $350 on average on my gains, I can't afford to be risking $300 on the downside on my stops because I'm just going to be a break even trader at that point. When I take a $300 loss, it's just going to null my average gain. So what I can do is I can then say, well, I can move my stop in, I can tighten up my position size so that when I do take a loss, it's only going to be around, I can position and adjust the stop to where I can finagle it to be $100 loss, a $50 loss, or $150 loss. I'm keeping it at a fraction of my most recent average gain. And once you understand that you have to fluctuate with the conditions of the market based on your math, what your actual results are, that's where you're going to get more consistency and you're going to allow your upside in real time to work for you to keep that 2-to-1 so you stay profitable. And at a bare minimum, you're keeping the losers small. So if the losers keep stacking up, then you can keep dropping your size or cut your trading off. And that's where this drawdown comes into. I don't know if you're still sharing my screen or not,
I
Juan.
am, yes. I have it up.
But that's what I'm kind of talking about is, right out the bat in January, for a small account to be down 10, over 10%, I was down negative $800 right out of the gate. You gotta really understand what your numbers are showing you so you can maintain that math. And if you can maintain that math, you can begin to, when you start stacking trades up, you can begin to maybe size up if your trades are showing you that you're winning and you're on, you're building some momentum, and just keep the risk in line because you can't afford with a small account. You can't afford to take a big loss. One big loss can totally just wreck your small account and undo months or maybe even years, depending on how long you've been trading and if you're still struggling of work. So any one trade should never be allowed to undo all your hard work, and that comes with just maintaining that risk to reward ratio, being consistent with what type of setups you're trading. That's how you get out of this rut of a small account. You don't get out of the rut saying, I'm going to go trade options and just go swing for the fences every time if you don't have a strategy. That's why the small account with options can be such a, like we've talked about, it's like this like dream, right? A lot of new traders start out, they're like, oh, I want to trade options because they have such a small amount of capital that they think they need options as a vehicle to get those 1,000% winners, and they think that's how traders trade. Like I trade off of a margin account. I trade shares, and I just manage my risk better that way. And you can still make money with a small account. My account's only at 8,000 right now, and I have a buying power of 16,000. And sometimes I go in 150%. I'll take a $16,000 position on margin, but I got a small stop. My stop may only be 50 cents away, a dollar away. And if I go in with 100 shares, well, most I can lose is $100. Maybe there's some slippage. But these are the kind of things you can think about. There's other ways of doing it. But if you're trading options, you should probably be thinking like Juan and really manage the risk. And then you're using the upside, potential leverage of the option. But if you're not managing your downside and you're just swinging for the fences, taking YOLO plays, well, then you need to look at how those losses stack up in relation to your average gainer and really understand what expectancy and risk management is.
And that's the big thing with options trading is you really, people let the losses, people, the option is going to go against you almost immediately if you don't buy time. I mean, if you're playing weekly contracts, I can almost guarantee you're going to get wrecked, more often than not, just because if that timing on that contract wasn't precise, and that goes against you 1 or 2 points, which is very typical for some of these stocks to move in one day. Your option contract is going to decrease by 50%, and let's say it decreased by 50%, you held it, and then it went in. It went in, and you made 20-30% of it. Was holding through that 50% drawdown worth it? No, because it could have kept going against you. Right?
Yeah.
There was no reason to let it go that far against you. Just cut it off. Your entry was bad. That's all it comes down to. Either your entry analysis was wrong, and that's the thing with options is you're gonna, there's a lot more factors that go into it than just will the stock go up or will the stock go down.
Or did I win? Or did I win? And how much did I win? Any one trade should never, I want to say, make or break you, and you shouldn't think like that. And if you're thinking that, like, if you get into a trade and you're thinking like, I need to make 1,000% on this trade, your thought process is completely jacked, because you need to think in a string of trades. Any one trade, we put ourselves as traders in a position to expose ourselves to those potential, like, home run trades, right? But we can't control how far something is going to go. We can control how much we lose, though. We can control where we sell. So we have to think about what we can control, and then we have to try and use our math and tracking our trades to try and put ourselves with a strategy where you can enter properly, have potential to make a ton of money. But if you're wrong, you have a place where you're going to sell out that makes sense to your average gain. I hope that makes sense. That's as clear as I can put it. You have to sell at either half of your average gain or preferably less. Now, it's easier said than done to trade with tight stops, but that's why we preach here tight risk entries, because if you wait for those tight areas, it's very easy to tell if you're right or wrong right away. And that's what I'm all about. I want to know if I'm going to be right, and I'm going to get right into profit. It's going to go. And then I have another problem of, deciding where to sell. And if I'm wrong, it moves against me, and it takes me out for a very small loss that I know is not doing damage to my account, because I know my stats. If I know I'm making on average $300, $400, well, I don't want to take a loss of more than $100 or $150. I don't want to get close to half of my average gain. And then you can see, based on these stats, like, out of that drawdown, we can just go to my stats and we can just compare what Focus has done for me. I'm already almost halfway to my profits that I made last year. I'm way more focused this year. I have setups and strategies, and these gains are compounding. These gains are, $300 doesn't sound like a lot, but I've adjusted from swings. Swings aren't working right now, and I'm maintaining my math, and that's what it can do. Even if I lose, I know that I can't lose more than $150 on any one trade. And so that's kind of how you need to work for that consistency and risk management and keeping risk tight and tracking your trades so you can learn and get better. Being in a small account is a very big challenge, especially when you don't have a strategy down yet and you're still learning. So you really got to work and earn it to get up and out of that. And these are methods and things to be thinking about, that can help you do that.
Yeah, I think overall, like you said, the journal is so important. Knowing your own stats, it doesn't matter what your price targets are if you don't know your own stats, if you don't know where you're selling, where you're getting emotional, what's stopping you out. You're not going to improve your trading at the end of the day. And that's why, like, you and I have both been preaching the journaling so hard. Just because we've seen the big difference it's made for our trading, and we know the difference it can make for everybody else's trading. Just going back, how do you position size? How do you choose your positions?
Yeah, so I'm very aggressive, right? And this comes into knowing yourself. I know I'm an aggressive trader. Like, I want to make big money. Every trade I get into, I have this urge where I just want to nail it. I want to top ticket. I want to enter perfectly. I want to top ticket on big size, and I want to take as much money as I can. That's just who I am. I can't help that. But I know that now, and I by tracking my trades, it's kind of allowed me to see how I can use that to my advantage. Well, a lot of my trades, I'm entering better now, right? I'm getting into profit, but my aggression and my greed doesn't allow me to sell and take that profit off the table when I have good profit. Because a couple trades, even though I've nailed down $300, some of these trades were up $400, $500, $600, and I kind of let them come back in. I'm like, oh, I'll let it pull back, and then it's gonna, I'm gonna see if it'll make a move higher, and then it just pulls back, consolidates, and then breaks lower and takes me out. And it's like, well, I should have just sold into the big green extension candle when it was up like 500-600 bucks, and I would have top ticked it. So, but at the time, you think it's just going to keep going up, and then you're like, okay, price action's pulling back. So if I'm on a win streak, depending on the market condition, I think, and how your performance is. When I was in that drawdown, I knew I needed to size down. So whenever I would look at where, if I was going to enter, I want to keep around $1 or 50-cent stop, depending on how the stock moves. So I know I keep it simple. If I say I'm going to enter with a $1 stop or a 50-cent stop, depending on how much size I go in with, directly equates to the dollar amount I'm going to lose. If I enter a stock with a $1 stop and I go in with 100 shares, I know I'm going to lose $100. And so I keep it really simple. So I'm going to let my math tell me. You know what I mean? I'm making 3, 4, 500 bucks. Well, I want to make sure if I'm using a dollar stop that I don't take more than half of that on a loss. So about $150. So I know anything I enter, I'm going to try and limit that, and I'm going to let that direct my size, if that makes sense. If I can keep a super tight stop, I'm going to bump that position size up because that means the stop is closer, and that means I can go in with more size because it's a smaller loss. It's a smaller distance. So I'm kind of letting my math and my average gain going to dictate my size moving forward, depending on where the stop is. I really hope that makes sense. But that's how I'm kind of doing it. And if I start taking losses, I'm going to start definitely dropping that size back down because I want to get smaller. On these drawdown periods, when you start getting off the highs in your account, you don't, if you keep trading with big size, you're going to make these cuts lower, deeper, and they're going to be harder every trade. You don't want to do that. You want to be getting smaller. When you're losing, you want to be trading on smaller size to do less damage or just cut your trading off. And then when you start getting some traction, like I did here, this started with like $40, $50 win here, right? And then I got a $100 win, and then I got a $300 win, and then I pulled back a little bit. I had a small, very small loss, and then I got a couple more $300 wins. So that's how you could see, instead of people doing so much damage on big size when things aren't working, get smaller, trade less, be more specific and patient. And then when you start getting some traction and winning, then you can slowly start to size up to build off that base. So now that I'm up here and I'm up on the year a good amount, I want to tailor back my aggression because I know the market's not good and I'm not really a day trader, even though things have been working for me. I really want to be patient and use this cushion I have to save until easier conditions come back. And then I can really, start sizing up even more once I see the market really get healthy again. Sorry if I went on a tangent there.
No, that's good. That's perfect. That's exactly what I was looking for. Because sizing really just depends on your personality. Just your setup in general. It's going to depend on your personality, the type of person you are, how much risk you're willing to put on the table for the reward. And if you're keeping that positive expectancy, then you should always be expecting upside throughout the year. And like you said, if you're taking losses, just cut down on the size and or cut off your trading altogether. Right now, as an options trader with $1,000 account, I'm only trading one contract at a time, and I'm typically keeping that to about 10 to 15% of my account. So I'm typically looking at one to $1.50 contracts, and I'm looking for those 30 to 40% moves, and that's bringing me in $40 at a time. But that's going to compound very quick. When I have that, when I can find consistency like really well, and I can get that that profit cushion, then I'll put on a second contract, same price. Keep that position to 10 to 15% of my account, and really, because with options you are exposing yourself to that leverage. I had $100, a little over $100 winner on Netflix last week, and that it makes up for a lot of losses, and that's exactly what you expose yourself to when you're trading. So I think it's all personality based, all setup based, and as long as you're not chopping yourself up, then continue to grind at it.
Yeah, and just respect your risk metrics. Letting your trading make its way into your decision making. And I know we were going to talk about profit taking here at the end too, and we're kind of running out of time. But not guessing about what kind of profits you're going to make. Right? Don't let yourself fall into that trap of like getting sucked into like technical targets. Like, because I always thought about that. Oh, I have to take profit at 2 to 1. Like, yes, on every trade you do want to do that, or you want to backstop that level. But sometimes as you gain more experience, you may enter a trade and it may only give you 0.5 R. It may only give you half of your risk. before it reverses. And so if you can scratch that trade, or that's where the discretion and the experience is going to come into play and you'll get better at. And not every trade is going to be a true 2-to-1. But the idea is if you can do that, if you can keep that 2-to-1 and keep those losses contained to half of your average gain, it can help with profit taking too, because we talked about this. If you do some math, like I said, hey, last year I took like 200, and I can tell you right now, I took 279 trades last year. I did just some quick math. If I did 200 trades on an average gain of $200, that's $40,000 in a year. That would be an insane growth for my account. So if I'm returning recently on average about $300, and I know that's about my average gain, what I'm making in this market environment here, that helps me with my profit taking ability, because I know, like, when I see a position move and I'm like, okay, I'm at a multiple of my risk. Like, I know on average I've been making around $300, or I get X amount of movement out of a stock. That helps me to know I don't want to let that average. I don't want to make my average gain go down, because if I start taking profits, if I let a huge $600 winner come back into $200. So you see how knowing this math kind of helps you in real time with your decision making, because today I made a trade, shorted Ford. I could have easily let this come back in and only been $100 winner. But once it started getting up in that $300 range, I started thinking to myself, I'm like, hey, like, this is what I've been gaining on average around this $300, $350 area. I don't think that's by chance. That's just what the range of the market has been giving me. So I know I was kind of getting very defensive around that level. I'm like, I'm not going to let this $350, $380 profit go below 300. And that's knowing my statistics and what I've been doing, what I've been extracting on average, make its way into my live trading to build on my stats. And you can use it for both. You can use it on where to cut your losses, and you can definitely use it on where to, take your profits if you're not, because when I get in a trade, I may have targets of kind of technically where I think it could go, but we can't, we don't know. And when it's in real time and price action is moving and you're seeing something where it could reverse, you don't have time to question. You need to make a decision, and have sell rules. And so knowing your math can help with profit taking. So, because every time you take it above your average gain, you're just improving that average gain too.
Yeah, definitely. And I think, like you said, it's just important to keep in mind overall. The small accounts aren't easy. Nobody said it was going to be easy. And then you're adding, the whole mental aspect of trading to the small account, and you're putting yourself in a tough spot. But guess what? I mean, the minute you grow that small account, the minute you gain that consistency, your emotions well, and that account starts growing, it's, game over from there. If you can manage a small account, if you can, manage risk well on a small account, I can guarantee you're going to be able to manage risk well on a big account.
Yeah, you got to earn those stripes and earn your consistency, and once you do that, you'll know it, and it's not going to be easy from there. Like, it's always going to be a battle, but at least you'll have the ability to be consistently profitable. And I think once you understand that and you become consistent, and you understand the power of focus on a specific strategy or setup, and you master that, well, then you have something that's going to potentially pay you for life. And then you can start to think about other setups and strategies to implement with that. But once you find one thing and you master it and you can trade it consistently and be profitable, like you said, Juan, it's game over. Your performance may vary year to year, but you should be consistently profitable from there on out, with that one thing. So
Yep.
really good stuff.
Definitely. It's it's something we're both experiencing in the now. So it's definitely something that we're working on, and we're really trying to grow. So, hopefully this year really shows that. It's obviously been tough, and we're not in a drawdown, and we might be struggling, but everybody else is too. So, I'm really looking forward to seeing how the rest of the year plays out. Obviously, we're going to be putting these out every week. And we're just gonna go from there.
Yeah, I'll keep on keeping on, man.
Yeah, 100%. I definitely think we can end there. Call it for week 6, and then we will see you guys for week 7
next week. Yeah, remember, guys, manage your risks, stay focused, and be relentless. We'll see you in the next one.
See ya.